Hello, everyone. Ryan and I want to wish you and your families an amazing holiday. And as we move into 2023 with a full and grateful heart, I want to thank everyone who has entrusted us or referred us a friend or family member for real estate. A big thank you. With that being said, we'd like to share our market update with you.
So let's jump into the computer right now. So here we are, everyone, back in my computer, and I want to just quickly show you a recap of what happened with the 2022 real estate market. And make sure you stay till the end of this video to see what experts are projecting will happen in 2023. So getting started, the site that I'm on here is Mortgage News Daily, and this is a site that we use to track what's going on with the mortgage rates. And I want to point your attention to down below here. It says on 12/29/2021. So we see that 1 year ago today, that interest rates were at 3%. And we see that in 2022, we know that the rates gradually went up, especially when Russia invaded Ukraine. That caused a lot of inflation in the world, and the Fed was raising the rate to try to cut spending. And we can see that just by June, that the rate had doubled to 6%. And that's something we haven't seen in over a decade. And then we see here that by August, it kind of went down a bit, but we see that the peak was around October of 2022. And this is around the time when the headlines were saying that interest rates could go up as high as 8% to 10%. Unfortunately, we saw a little bit of a dip, and now we see that interest rates are around 6.5-ish percentage. Something I wanted to show you guys, just in case you're not that familiar with how much 1 point can do to your interest rate payment and what that can affect in terms of your buying power. I wanted to show you a quick example of what it looks like when your interest rate goes up from 3% to 4%. So starting off with the basics, I wanted to show you guys that if your interest rate just goes up by 1 point, that means that you're going to lose a total of 10% of your buying power. So let's say, for example, that you were trying to purchase a home for 400,000 and your rate was locked in at 3%, but your rate goes up to 4%. That means that you would lose on average about $40,000 in buying power. So how did we get that number? We got that number because we took 400,000 times 10% equals $40,000. So that means that if you wanted to maintain a $1,500 monthly payment and your rate went up to 4%, that means that you could only afford a $360,000 home. So that kind of gives you an example of just how much power the interest rates have over buyers and how they can have the potential to cut down the buying pool, to cut down demand, and therefore making the home supply go up as buying demand goes down. So we just talked about interest rates, and now I want to show you what that increase in interest rates did to the real estate market. So this chart here, this represents Palm Beach County as a whole. And what we can see is that as the interest rates were going up, what exactly does that do to affect the housing market? Well, what we can see from this chart here is this chart represents homes that were for sale and homes that sold. So we see with the light green here, and we saw that around in March, that's when the interest rates really started going up. As those interest rates were going up, the buying pool was being cut in half. And so what was happening to homes? Well, there was more homes that were staying on the market longer because they were taking longer to sell because the demand had essentially been cut in half. And so we can see that here because the dark green represents the amount of homes that were selling, and we can see that those were less. To give you guys another example of what I mean about home inventory going up, we see that last year at this time, we were around a 1.2 months of inventory, and now we're sitting at 4.6. And so what this really means is if we look here at the market highlight, a buyer's market is when there's more than 6 months of inventory based on closed sales. A seller's market is when there's less than 3 months of inventory based on closed sales, and a neutral market is when there's 3 to 6 months of inventory based on closed sales. So we see that for the majority between 2020 to 2021, we were really in a strong seller's market. And now on average in Palm Beach County, we're seeing that we're approaching more of a neutral market with 4.6 months of inventory. And so now you might be asking yourself, well, what was causing the home inventory to go up? Well, according to this chart here, it talks about how the homes available for sale was not due to new listings. In other words, it's not due to the fact that buyers, or I apologize, builders are building new homes and putting them out on the market. It's the fact that these active listings were staying on the market a lot longer. So right here we have March. This is around the time that we saw the interest rates really start going up, and we can see that by these bars here representing the active listings, that homes were staying on the market a lot longer because they were taking longer to sell. And on top of that, as new listings were coming on the market, it was causing a compounding effect. And that's why we're seeing that home inventory has gone up almost 100%. And to show you with real data what I'm talking about, let's go back over to Palm Beach County. And I want to point your guys' attention to the amount of homes that were for sale in November of last year compared to November of this year. In November of last year, we see that there was 3,000, close to 3,500 homes that were for sale. And now that number that's pretty much doubled. When we look at homes that have sold, we see that in November of last year that there was around 2,900 homes that did sell, whereas this year we see that there's 1,610. Months of inventory has also gone up. So in last year we were around a 1.2 months of inventory, and now we're sitting around 4.6. And what this really means is that if builders stop building homes and there was no more listings to come on the market, it would take on average in Palm Beach County around 4.6 months for all the homes to sell. We also see that the average days on market also increased. So last year at this time, homes were selling on average in 35 days, and now we see that they're selling around 45 days. So what that number represents is that for the time for a home to go on the market, go through showings, go through professional photos, and to see an offer that they like and want to accept, it's taking around 45 days now. One other statistic that I wanted to point your attention to is the sold to list difference. And what this represents is the percentage that a homeowner will receive when selling their property. So let's say, for example, that they list their home for $100,000, but then it only sells for 96% of the list difference. What that means is they would end up walking away with 90% of their money. So, instead of 100,000, they're walking away with 96,000. And we can see that overall for Palm Beach County that the sold to list price has pretty much held, which is good for sellers. But I'll also show you with some more localized examples coming up that because these interest rates have gone up, because the home inventory has gone up to, these numbers over here, sellers have had to chase the market down and they're receiving a little bit less for what they listed their home for. So to provide more of a local example, here we have Boynton Beach, and you can see that our inventory of homes for sale definitely went on an increase this year. We see an increase of 127% with 453 homes now on the market. We say that the home inventory has gone up to 2.8. So we're still technically in a seller's market here in Boynton Beach, but nonetheless, home inventory has gone up 180%. Because of that, we see that last year at this time, on average, homes were selling within 19 days, meaning if they went on the market, they were priced correctly, they went through showings. By the time they accepted an offer, it was within 19 days they were under contract. And now we're seeing that on average, it takes about 32 days in Boynton Beach. This is the other thing I wanted to talk about regarding the sale price to list price. That's essentially what percentage of overall list price here is that in Boynton Beach last year, typically you could expect that you were going to get like 98% of whatever you were asking for your home. And now we're seeing around 93%. So that's gone down. So that's showing a shift in the market and how home prices are softening, and also how sellers now have to negotiate more with buyers in order to get offers accepted. In Lake Worth Beach, we see that home inventory also went up. We see that it's gone up around 39%. We can see that here, where homes last year there was around 272 homes for sale. Now there's 378. Home inventory has gone up from the seller's market. So originally it was in an intense seller's market at 1.6. Now it's at 2.9. So it's just about to exit a seller's market. We see that the median time to contract was around 19 days, and now it's sitting at 37. If you were to sell your home last year, you could expect to see about 98% of the list price, and now you can expect to see around 93.5. And we see that closed sales also went down. So this is similar to some of the charts that we already saw, how sales are down 46%, but yet home inventory is up 40%. And lastly, for Delray Beach, we can see that the home inventory went up 61% with 312 homes now on the market compared to last year with 193. We see that we've kind of exited a seller's market how we're entering more of a neutral market, but home inventory went up 135.7%. We see that the days on market average went from 32 to 43. So again, for the time it takes for a home to go on the market, go through showings and accept an offer is around 43 days. We see that the sales price, the list price has also gone down in Boynton Beach by 6.7%. So now on average, sellers are getting about 90% of what they were asking for on their home. And we see that closed sales is down by 50%. So as a recap, what we're seeing is that the mortgage rates are going up, home inventory is going up, sales of homes is going down. Everything's shifting. So like in 2021, we saw that there was a lot of demand and low supply, whereas now there's more supply and a less demand. So what that means is that sellers have to negotiate more with buyers. Buyers have more leverage in the buying process because they have more negotiation power. And as promised, this is what experts are projecting to happen in 2023. So between Freddie Mac, Fannie Mae, the Mortgage Bank Association, and the National Association of Realtors, they're expecting that in 2023 that mortgage rates are going to continue to go down, which is a good thing for both buyers and sellers. So we're seeing that in Q1, they're expecting that it'll be 6.35%. And on average, we may see mortgage rates go down as low as 5.73% next year at this time in 2023. So in summary, this is good for buyers and for sellers because at the moment, buyers are waiting for the interest rates to go down and sellers are kind of on the fence to sell because they see that buying power has been weakened and they're also not sure if they want to sell and then purchase a new home with a higher interest rate than what they have right now. So if the interest rates continue to go down, that'll be good news for both buyers and sellers. So that about wraps up the video that we had for you today, and I hope that you found it helpful. And if you did, keep an eye out for the next video we're going to be releasing regarding programs that can assist first-time home buyers. If you're thinking about making a move to Florida or relocating in Florida, be sure to give us a call, shoot us a text, or send us an email, and we'd be happy to help you make a smooth move to South Florida. See you next time.